Today's day number 77 of the $1,000 account challenge, and I'm up $172 in the account, or 1.27% of the total portfolio balance. Now, it may not seem like a lot of money, but being up 1% in your account every day is amazing, because when you get to those higher portfolio balances, you are going to wish that you were up 1% in your account. If you don't know, my name is Gates. I'm taking $1,000 and I'm day trading options to see how far we can grow this account. Today I took 2 trades, 1 winning trade and 1 losing trade. Unfortunately, that losing trade did cut into my profits a little bit, and my winning trade, I sold it a little bit too early, so I didn't quite hit the profit percentage that I wanted to. But let's break down the trade. Straight off the day trade watch list, we had SPY as a long idea above $502. SPY consolidates. It's a gap up day, by the way. So consolidates under the trigger level, opening pullback slightly, back up to the level, and then breaks it and pulls back here. So you might say, Gates, why not take the entry when you get the pullback right here? And the reason why is because this is at 9:44 a.m. Eastern. I knew that we had PMI data coming out at 9:45 a.m. Eastern. So had I taken the entry long here, yes, in this scenario, it would have paid, but this could have easily been just as big of a candle down as it was as a candle up. So it was a 50-50 shot here. And I didn't want to take the trade at the time. I didn't want to put my portfolio or my position at risk of this just coming down on me. So waited for it to make its move, right? And then we were going to play the direction of the move. We do get the breakout into the high of day. That serves as confirmation. And I told the team I'm going to go long on the first dip offered. So this started to dip. I was waiting for this to actually dip further, and it didn't. And as soon as it started to print back green, I went long on this candle right here. And we get the move down. So we're actually red on this trade. Well, I think we're up like 10%. I didn't take the profits. And then we're red on the trade. From here, I told the team, I was like, this is where you need to start thinking about either adding to the position or cutting the position or holding through it. I said that if it breaks any lower than 502, I would cut. And I did not commit to the add here. So I took a starter size. That kept me in during the dip. But then I didn't commit to the add, which would have lowered my cost basis, which kind of unfortunate that I didn't do that because I could have put more size on. And then we get the reversal and then move back up to the high of day and through the high of day. Now, I took my profits up here about halfway through this candle because I was thinking that this is kind of, 1, 2, 3 green candles in a row. Kind of bigger candles too. I just didn't want to see this reject at the high of day and then me be up on the trade for this to turn right back around and me take a loss on the trade or back to break even. So I made the decision to take the profits about halfway through this candle, about up 13% on this trade, which did run to 20% literally 1 minute later, but that's okay. So 13% gain on this trade, and then I made the decision not to go back in on SPY, but look at this move that it made. It would have been tough, I think, to go back in on this because you weren't really given, we were given these higher lows here, but you weren't really given a dip opportunity that was even down to VWAP, right? We didn't even really get a dip down to VWAP, but I don't think that there was no sort of pattern here or dip opportunity that looked valid to me. If anything, this kind of looks like a rising wedge, which is actually a bearish pattern, bearish reversal pattern. So took the one trade, 13% gain here. Done with that, right? That was my winning trade on the day. Now I went over to AMD, which today was a long idea above 152.5, and it was a beautiful level because it kept rejecting off of that level. AMD, long idea above 152.5, but I took the entry well before a break of 152.5, and the reason why I did that is because I noticed AMD holding support down here at around $151. Then I noticed the downtrend trend line. So you have a high, you've got your lower high, and then a lower high and another lower high, all kind of converging to the point of this triangle here. And then all of a sudden, boom, you get a break, a little higher volume here, boom, a break of the downtrend trend line and a higher high put in. So I'm thinking, hey, this has done enough consolidation during this entire pattern right here. There's a chance that if this breaks out and goes, you're not going to get a pullback. So instead of waiting for a pullback, I market buy the break here, right? Now, this is kind of screwy because the trade idea was absolutely correct. I market buy the break, and what I'm looking for is this exact move. Boom, 4 big green candles in a row up to the high of day, sell, take the profits, right? Unfortunately, it doesn't give us that right away. It gives us a breakout and then a pullback within the downtrend trend line. And I'm thinking, dang, maybe we just got faked out right here. So I closed the position out at a 10% loss because I don't want to give up all of my profits from the previous trade. Now, this is super key, very, very important. If you are ever green on the day, especially from your first trade, and you're in with like half size or normal position sizing, make it a point that on any trades beyond that, not to turn your day from a green day into a red day. So whenever you're taking future trades or assuming future risk, it should be a goal of yours to not lose the entirety of your previous profits plus some, okay? This is very, very important. It doesn't matter if you're trading with $100 or $10,000. That should always be the case. If you have a green day on the books, try to keep it a green day or a break-even day, but no reason really why, unless you get caught up in a super bad trade, but no reason really why a green day should turn into a red day if you have sizable profits. So in an effort to protect my profits, down 10% on the position, I close this trade out. And unfortunately, it does reverse and give us the move right back up and goes through. So you might go like, well, Gates, why did you? So I entered here and then closed out here. But you might ask, Gates, why not re-enter the position over here? I thought about it. I even mentioned to the team that we might go back in on this. I just didn't pull the trigger. By the time that this candle had broke through 152 and created the higher high, I think it was already up to the top. And I was like, you know what? I'm not chasing this move. I should have been ready, somewhere over here instead. So I just sat on it and watched it go. So unfortunately, the trade went without us, but fortunately, my analysis here was correct enough that this could have been a winning trade. Just the timing was a bit off. And there's nothing that I'm at, we're not at fault. I'm not at fault for a bad time to trade. I mean, everything was there. The break of the downtrend trend line, the higher volume, the higher low, the buy up off the low, the break of VWAP. It all looked like it was true here. And sometimes you just get faked out, and there's not much you can do about it other than cut the trade early when it's not working. And so that's just what I did. That's in my plan. So just an unfortunate series of events here, but what we can take away from this is that the analysis was correct, and we did get a break at the downtrend trend line and the run up to the high of day. This put me green on the day, but not as green as I was, up $172. I want to give a special shout out here to Mario, who's up 1.6% on the day. And regardless of the P&L here that you see, the member's up $29 on SPY, down $11 on AMD. So my assumption is that Mario took the same trades that I did, right? The winning trade on SPY and then the losing trade on AMD. This is a perfect example of proper risk management. Okay, so regardless of if you're trading with $100 or with $10,000, this type of win-loss ratio should be consistent throughout your trading, no matter what size you're using. Notice on Mario's green trade, it's more than double the amount of profits than the amount of loss on the losing trade. $29 gain on SPY, only an $11 loss on AMD. I will take that any day of the week. Yes, the losing trade on AMD sucks. Yeah, we might have gotten faked out here. Yes, we cut into our profit some, but still it's a net green on the day, and it's more money in the account than what we had yesterday. And in my opinion, the AMD trade was worth the risk. This move here could have easily happened right after we market bought the trade there. So, you're not going to make any money if you're not taking any risk. And we assume the risk, but we manage the risk, okay? So good job. Special shout out here to Mario. Good job on that. And I even said this is excellent risk management. Well done, allowing that winner to be bigger than the loser. That's it. That's all that I have for you today. Press that like button for me if the video has helped you out, and consider subscribing to the YouTube channel as well, as it's just the best way to support me as a content creator, and it's free to do. Please. I have a subscriber goal of 10,000 subscribers this year on YouTube. We're nearly there. We're a couple thousand off, but we're nearly there. I think that it's possible to get there, and I can't get there without your support. So please consider subscribing. Thank you so much for your time, and I will see you tomorrow when we continue the $1,000 account challenge. Cheers.